Hello everyone, Newborn Investor here and welcome to another video. Today I would like to talk about the reasons why I doubled in on Pershing Tontine SPAC, ticker PSTH. So if you're interested, make sure to stick around as we are starting right now. SPACs has been on fire lately and looks like it is not going to slow down anytime soon. In 2020, SPACs raised a whopping $82 billion, which compared to 2019 is humongous. I traded most of the SPACs and was able to capture my share of the profits. My biggest winner was on ChargePoint ticker SPE, which I recommended back in November. As more and more SPACs roll out, investors may feel that the market is overcrowded, but in reality, the market can afford more. Billionaire investor Chamath Palihapitiya in one of his podcasts talks about this concern, where he points out that back in the year 2000, the US market had around 8,000 publicly traded companies, but fast forward to 2020, the number has shrunk to 4,000. So clearly more number of SPACs should be treated as an opportunity and not as a concern. Now going into 2021, I am betting on Bill Ackman's SPAC Pershing Tontine Holdings. I think PSTH has great upside potential for the reasons we are about to discuss, and we'll get to it in a minute. But before that, if you like this video and find it valuable, please make sure to hit the like and subscribe button. Your humble gesture keeps me awake at night and motivates me to put in the long hours for making these videos. Alright, let's move on. Pershing Tontine Holdings would be my first pick for 2021. I had already done a video on the prospects of PSTH and my opinion has not changed. So if you have not watched it, I highly recommend you watching that video first before continuing on this one. You can find the link to that video in the description below. PSTH opened to trading with an initial price of $20 and it's up over 20% without any major headlines. So what makes PSTH good? Most SPACs favor sponsors at the expense of shareholders, but PSTH is different. Sponsors typically receive shares representing 20% of the SPAC's common shares at an abnormal discount. These shares are then sold in the open market, leading to significant gains for the sponsors. Unlike all other SPACs in the market, PSTH does not offer sponsor shares. The sponsor's entire economics relies on the warrants it purchased. PSTH offered sponsor warrants at a strike price of $24, exercisable only after 3 years. So if the management wants to make money out of this deal, they should find a really good company that performs well in the long run. Bill, in one of his interviews, stated that he and his colleagues will be taking no compensation, no management fees, and no incentives. This to me is a huge win for the public shareholders, as buyers of PSTH has Bill Ackman on their side, working to find a company that can potentially make its investors rich. I urge my viewers to understand the word tontine, which is part of the SPAC's name. A tontine is an investment plan through which PSTH incentivizes long-term holdings. Well, how does it do that? Let me break it down for you. It simply means that any investor who holds a share of PSTH through the merger would receive 2/9 of a warrant with a strike price of $23. So if you hold 9 shares of PSTH post-merger, you will get 2 warrants. These warrants are called Tontine redeemable warrants and are fixed in number. According to the last S1 filing, PSTH offers 33.3 million of such warrants. What makes this even better is the fact that the 2/9 of a warrant held by any shareholder who sells PSTH stock before the merger goes back into the pool for those who hold through the merger. This means that if I continue to hold through the merger, in addition to the 2/9 of a warrant that I hold, my fractional warrant could increase to 3/9 or 4/9 or even higher. Now, post-merger, how much of the fractional warrant could one receive? Well, nobody knows the upper ceiling, but the minimum is 2/9. This is a great benefit for long-term shareholders, rewarding them for their loyalty while discouraging dilution. So now I'll leave the thinking part to you. Personally, I like the deal and will love to add more if the stock pulls back to $23. As of releasing this video, I own 151 shares at $25.71 and would be looking to add more in the coming days. In a year when SPAC transactions have seen increased prominence, PSTH certainly stands out. Pershing Tontine Holdings incentivizes shareholders for holding on through the business combination, and its shareholders get the benefit of having a financially motivated sponsor on their side. For these reasons combined, I would continue to hold PSTH into 2021. If history has taught me anything, it is the simple fact Do not bet against Elon Musk and Bill Ackman. Now, I would love to hear from you guys. Would you be looking to buy PSTH in 2021? If so, why? Leave a comment below with your answer and I'll be sure to follow up with you. Also, if you like this video and found it valuable, please make sure to hit the like and subscribe button. I really appreciate your support. So until you hear from me again, stay safe and thanks for watching. Bye.